Welcome to Unfiltered Finance. I'm your host, Ron Geffner, Sadis and Goldberg, one of the founding partners, former SEC enforcement lawyer. With me today, I have Jeff Fidelman. So first and foremost, why don't you educate the audience as to what it is you do?
Well, first of all, Ron, thank you so much for having me on the podcast here. I founded Fiman and Company in 2015, a little over 10 years ago, with the intent to help early stage companies and emerging managers raise capital. Given how the market looked and continues to look today, we wanted to take a unique approach to providing services to our clients while making sure to increase their chances of success in raising that capital. So what we ended up doing was creating a managed service to help our clients fundraise. We call it fundraise as a service. We've gone out and subscribed to a variety of different investor databases like PitchBook, Preqin, Fintrix, and others. We've aggregated all of that data internally, and then we layer an analyst on top of that to do the outreach on behalf of our clients. So Alex from ABC Company calls investors, or Alex at abc.com is emailing investors. And from the investor's perspective, it's the company or the fund reaching out to them directly as opposed to a third party.
Can you sort of define what an early stage company is as well as an early stage manager?
Sure. So on an early stage company side, the way that at least we define it or how we see them is a company ranging from seed to Series B, raising anywhere from a few $1 million, let's say 1 to 5 on the lower end, up to about 30, 40, 50 on the higher end. An emerging manager, I understand, is technically defined, especially in the attorney world, by funds up to about $350 million these days. The way that we define them is in a similar format. Let's call it fund 1 through 3, maybe fund 1 through 5, up to about $200-300 million. And really where we come in is top of funnel outsourced investment relations function, where we go out and we provide our clients with qualified and interested investors so that the client, whether it's a founder or a fund manager, can present their business to someone who's already warmed up and interested in hearing from them.
So with regard to emerging managers, just to add more data to it, the threshold for assets under management determining what you would define an emerging manager is all over the place. There's no uniform understanding, which I know you know, but I've heard it as high as up to 1 billion somebody's deemed to be an emerging manager. Yes, I would have said probably in the what number range you're at, in the 250 to 300 million, because it's not uncommon. It's not common, but it's not uncommon for managers to find a seed investor of $100 million and still be deemed an emerging manager. And it's not necessarily a function of duration of how long somebody has been managing their fund, which people not in the fund industry may not know that. So walk me through the process. Somebody rings you up. Mm-hmm. And if the process is different between a company versus a manager, clarify, but I'm calling you up, right? So walk me through the process so people can understand what to expect.
For sure. And I think it's an interesting question. I'm glad you asked it, because our process, whether it's for an early stage cosmetic company, a late stage aerospace or defense company, a $10 million venture fund, a $200 million hedge fund, our actual process is exactly the same across all of those mandates. The only two differences for each mandate are the investor contacts that we target and the copy that goes out, right? What the email says, what the analyst is saying to the potential investor, trying to get them to be interested and connect with the founder or the GP. So the process beyond that, what kind of does that structured process look like? We start out by, like I said, having access to all of these investor contacts, and we enrich them. And we've been doing this for quite some time, so we have a little bit extra data on each of them. Every week, our associate pulls about 80 to 100 investor contacts and provides that to the analyst. Those contacts are very broadly filtered. So if you're a fintech company, we're not going to, look for biotech investors. If you're raising $1 million, we're not going to a $1 billion fund, and vice versa. If you're raising $200 million, we're not going to $1 million or $10 million family office or angel.
Yeah, you're trying to pair the allocations being sought to the investor and their average size of a ticket.
Right.
Or investment.
Exactly.
Correct.
So the associate kind of pulls on broad criteria, provides that to the analyst, about 80 to 100 on a weekly basis. And the analyst's job is first to qualify each and every single one of those investors on that list, and then personalize the outreach. So qualification could be going to the investor's LinkedIn, website, social media, into our database to understand where they're allocating, what industries, average check size, dry powder, et cetera. And then the personalization is something that is custom for each investor to show the analyst conviction around why they are reaching out to John Smith, Mary Sue, or whoever they are reaching out to. Once that's done, those investors get put into essentially what looks like a marketing campaign. So it's a sequence of about 10 days of calls and emails going out to that specific investor. And then what we do is provide a report to our client every week, broad strokes report containing high-level KPI open reply rate, call connectivity rate. And we also provide our clients with a list of every single investor that has engaged, even if it's passing, their names, contact information, personalization. We feel that all of that data belongs to our client. We also meet with our client on a weekly basis so that we can review the report, review the investor calls that they had from the week prior, and then if needed, adjust the strategy either on investor search and filtering or on the actual copy that's going out to those investors in order to optimize open and reply rates.
So how do you go about diligencing the clients, meaning the company or the manager?
Sure.
Because that can be a challenge. And it seems that there's some standard stuff people check because we're part of that standard stuff that people reach out to confirm that we're the law firm.
Mm-hmm.
But there's a lot of nuanced ways to approach this, as I'm sure you know.
Oh, for sure.
Yeah.
If you were to ask me about a year ago, my answer, tongue in cheek, would have been, my diligence is when the check clears. It's changed since then. And to be clear, because we are reaching out on behalf of our clients, so Alex calling from ABC, it's not Jeff calling from Fidelman and Company, we're really becoming an extension of our clients' fund, firm, company, etc. And really the main point of, let's call it either rejection or turning down a potential client's mandate or opportunity is when we start having that conversation, if their expectations are not based in reality or not aligned with what we are capable of delivering. So for example, if a client comes to us, again, fund or company, and their expectation is that they'll raise and have money in the bank within 30 to 60 days, I have to tell them that that is not the reality, and that's certainly not how we work. They'll have calls within 60 days with potential investors, but to promise them or guarantee or even state to them that I believe you will have money in the bank in 60 days, first of all, I would be doing them a disservice. And second of all, that's not a realistic expectation. So I'd rather state that immediately at the beginning, even prior to engagement, than trying to sell some sort of snake oil or contact or promise. And then 30, 60 days later, that same client coming back to me saying, hey, Jeff, you said we'd have money in the bank and we don't, being frustrated with our process.
Sure. So managing clients' expectations, very logical.
Yes. So that's really what it is. Again, we're providing a managed service. So from the positioning of diligence, we are not representing the company. We are providing a representative to the company to go out and reach out on their behalf. So again, the diligence, as long as they're not on any type of wanted list or red notice list or OFAC list, any type of, let's call it, significant barrier for us to work with them through our broker dealer, we're providing a managed service. So really, as long as someone's background is clear, we'd be able to work with them.
And so as you're diligencing firms out, any obvious things that people should avoid doing or any war stories? Because I can share a bunch. And we often ask our clients for educational history. Mm-hmm. Every once in a while, somebody didn't graduate from the school they claim they've graduated. It might be one out of hundreds and hundreds of searches. Or there's some other incorrect data. I knew of a company once that was in the process of being acquired. It was a multi-billion, it was a big shop. And we found out that the COO, we didn't represent them. This was a story told to me by the general counsel. They found out after 20 years because the acquirer background checked everybody. And this person basically for 20 years went unnoticed. did not graduate the school as the person claimed to graduate from.
Mm.
And this was a household name where you may know the firm, and nobody, imagine 2 decades, nobody double checked the information. So that's what I'm saying.
Look, at the end of the day, we're not accountants or attorneys.
Yeah.
I still try to tell my clients something. And one of my first jobs or my internships was at a law firm. I'll never forget, one of the main partners would tell me that the truth is the best defense. So I always tell clients that, tell me everything that is going on, and I will, to the extent of my ability, help you position that. In today's day and age, unless it's extremely wrong, in which case we wouldn't work with them in the first place. But if it's an operational business and it's something simple like, education or along those lines, I'd rather that client fess up and just be straightforward about that with potential investors that they're reaching out to, not represent that they even graduated from that school or institution, and just move forward. But if they don't tell me, if they represent that, and if it comes back on a background check, and we have similar things with bankruptcy cases, working with attorneys or with attorneys that have been sued in the past. And, I don't know any attorneys that haven't been sued. I don't know about you, but, it's probably explainable. Honesty is the best policy. I personally follow that all the time. And if something isn't right, I'd rather just be upfront about it, talk to the investor, and navigate that situation, because ultimately, an investor, as much as they're interested in you, whether you're a founder or a GP, they're also interested in the strategy that you're running. So if you start the relationship off on a lie, that's what hurts the most. It's often that you lie to them, and less so about what you lied to that person about.
Certainly, it erodes a concept of trust, and every relationship, the bedrock of which is trust. So could not agree with you more. And in most cases, the lie is worse than the thing they're lying about.
For sure.
Yeah,
especially in early stage companies or with emerging managers, because ultimately the investor is trying to build a relationship with that GP or the founder. That's the most important piece of that investment occurring. It's the relationship being built.
Do you go through evaluation of the companies in order to understand if I'm making an investment, what percentage of the company, whether it's debt or equity, I'm having an interest in?
Oh, yes. Right. So unless a company comes to us with all of their documents prepared and they're very firm on those documents not being touched or revised, we'll always provide a review of a deck, a model, evaluation. We'll always provide suggestions on updating, or even do it ourselves if it's not such a heavy lift on the client's behalf, to update their materials. Valuation, just specifically because you mentioned that, I think that the biggest piece of valuation is to not be absurd. I've not seen yet in the past, let's say 10 plus years that I've been doing this, and even before that in venture and in banking, I've not seen an investor walk away purely because of valuation, unless it was absurd. So if an investor, you're raising X amount of dollars at a 20 or a $200 million valuation, regardless, and the actual valuation is 10, 20% plus or minus around that, the investor will just come back to you and say, look, I like the business, I don't like the valuation, here's where my head is at. If the investor is coming back to you and saying the valuation is too high with the numbers that I mentioned, plus or minus 10%, there's probably some other reason that the investor is passing. But if your company is worth 10 million, let's say again, plus or minus, and you're going with a valuation of $1 billion, then it's unreasonable. And that just will immediately allow the investor to walk away without looking at any more detail. Because if you're asking for $1 billion, there's probably a bunch of other, let's say, misaligned projections that founder is putting forth.
So quick question, by the way, how'd you get into the industry? I always find it really curious how people end up in their careers by choice, so that if people are listening and they can't really relate to what you do, or it seems so extremely different from where they're at, they may not feel so removed from an opportunity to look for some type of career path similar to yours.
I was always entrepreneurially minded, kind of, the kid that was trying to make money on either shoveling snow or selling pizza pies or whatever the case may be.
Did they have newspaper routes when you were a kid?
Oh, yeah.
Yeah. All right. So I did a newspaper route when I was like in 6th grade.
There you go.
And I had
the
a comic
value-
book stand at the age of 16 at a flea market where I was making a couple $100 a day.
Sure. And the value of a route, for example, whether it's newspaper, water, garbage, whatever, is the actual route, and not the product. So I always had that kind of in my mind. My dad owned a business as well, so I was always there with him, and ended up starting a real estate company right around 2008 when, everyone gasps when I say that. But the reality was, especially in New York City, we started one of the first buyers only brokerages. And the main two types of people that were buying real estate in the city were Chinese buyers and Russian buyers.
Okay.
I think I told you right before this podcast, my family immigrated from Soviet Union, so I speak Russian fluently. And that's how I started kind of navigating the real estate business. And as that started to grow, I started going to college, commuting back and forth from Boston, Thursday to Sunday in New York City, take a train back up to Boston, Sunday to Thursday to take classes. I didn't love what I did, but it was making me money. After graduating, I ended up selling a piece of that business to my partners and going into finance because so many of my colleagues in cohort were going into finance. Spend time in Morgan Stanley. I always tell people that like my first day there, I speak English fluently, of course. Everyone was speaking English. I didn't understand a word that they were saying. And that motivated me even more. I've always been such a curious person growing up and continue to be. I always tell my colleagues today that I think that's my superpower, that I'm genuinely curious about business and companies and how things work.
And that's what Einstein was known for saying, or at least one of the things he was known for saying. He wasn't the smartest person, but he was one of the most curious people, which I identify with. Like when I have work being done around the house by any trade groups, I always come home, I want to watch them. How do they put the pool in? How do they do the woodwork? How do they do the electrical work? Not because of trust, but curiosity and learning. The opportunity to learn is something that I've always wanted to experience and do experience.
Absolutely.
So I relate to that. So you're at this firm, they're speaking English, non-English. And
you're a curious person. I was very young at the time as well, probably youngest in the cohort that came into Morgan Stanley.
Okay.
And learned very quickly. I was partnered with, funny enough, another Russian-speaking individual who he and I ended up growing a very significant business there. And in my mind, I liked what I did, but I didn't love what I was doing day to day. And I didn't want to be like a hunter anymore. I wanted to go into corporate. So that was one of the reasons why I ended up moving. Also, Morgan Stanley bought out the rest of Smith Barney in 2010, 2011. So there was a major restructuring. I don't want to say forced anyone out, but let's say gave a path to a lot of people to leave. So that's why I left. I went to HSBC, worked in corporate, liked what I did as well. And it was an eye-opening experience working from kind of an institutional bank like Morgan Stanley and then going to a more retail-oriented bank like HSBC. And while there, I did very well for them as well. But in my mind, I was thinking like, I want to be almost like an efficiency consultant, going into companies, figuring out what's wrong, and then helping them grow and build from there. So I started applying to consulting firms, had an offer from, I think it was PwC at the time. And that same day, I met or I knew someone at the private bank. I would go to a lot of their events. And one of the families had approached me basically to help them start a venture fund for their next generation, for their kids. And I thought it was a very interesting, unique opportunity. So I ended up doing that instead of going into consulting. And the thesis of this fund that I worked at, the venture fund, was that they would anchor early stage tech and tech-enabled companies as an investor, and then help those companies go out and syndicate the rest of the capital. And working through that over the course of about a year plus, I realized that institutional banking had such a structured process. And not only were bankers shunned and a dirty word, but there was also no process and no one for these founders to go to actually understand like what is the process to raise capital, but they really couldn't go to a reputable individual to help them. And I say that because there's, if anybody has been in this world, whether it's funds or companies, I said to my last call, I often walk into these with a black eye for a fight I was never in.
Sure.
So recognize that, and then essentially left in 2015. I actually left the fund the week after I got home from my honeymoon. First time in my life I left a job without
Really, she was that controlling?
Oh my gosh. First time in my life I left a job since my first job, really, without having anything lined up, without having a plan. I would not wish this on my worst enemy. And that first year or two was really me just saying yes. And a lot of the companies that I was helping, a lot of the companies I was already in touch with were early stage founders, early stage companies that just needed to put their fundraising materials together and then figure out a way to go out and raise capital. So the first, 2, maybe 3 years of this firm was me helping companies and funds put together their investor presentations, models, and valuations. And the last deliverable I would give to our clients was essentially a book that I would hand them. And it was a fundraising strategy. So here's the email copy that needs to go out. Here's what to say. Here's a list of investors I'll pull for you for a pitch book to get started on this. Do this, and eventually you'll raise capital, or at least you'll get in front of investors and you'll have the chance.
But yeah, you at least provide an open door, and the rest is on them.
And what ended up happening was that 12, 16 weeks later, after kind of that final deliverable, majority of our clients would come back and say, Jeff, this is great. Can you do it for me? And that's how, initially I didn't want to be a banker or a broker. And because I knew how the industry from venture perspective or even investor perspective reacted to those people. So it took us about a year to come up with what is effectively a very simple concept to do this outsourced investment relations or managed service around fundraising. So that's kind of, skipping over a few details, but that's ultimately how we ended up launching Fundraise as a Service and the business that we have today.
In the time that you've been doing this, right, it's been at least 10 years based on your responses to my question. Mm-hmm. What have you learned most about yourself in the business world? Because you've had to deal with conflict. You've had to deal with a range of different life experiences that you might not have. And I can give you a sense. I'll lead by example. So when I founded Sadis and Goldberg with a few other partners, I'm 30 years old, as I said. I'm eager to please. I want to make money. I want to do a great job. And so at first, as long as it wasn't anything illegal, and thankfully nobody ever asked me to do anything illegal, I would do what the client asked. And as time went on and I became more secure with my skill sets, I realized just because a client asked it doesn't mean they need it. And it may not even be in their best interest. So I learned that I have to sometimes create the boundaries or lanes for the client to stay in and educate them as to what they really need after listening to all the facts that are relevant to the decision process. So imagine I'll give you a fact pattern that's not on point, but presents the idea well. Imagine you live in a neighborhood where all the houses look really great, and somebody comes and asks me to paint their house some ugly, hot, bright color. You're paying me. I don't care what color you're painting. I'll do it. But maybe it goes against the bylaws. Maybe it harms the value of their home. I learned to start asking questions that the client didn't really have an appreciation for because I'm engaged to do what's in their best interest. And sometimes it means I'm there to protect them from themselves. So that's one of the many things I learned. Another thing that I learned was, right, we all hear not to take things personally. Mm-hmm. And by the way, I still take things personally. But when I'm trying to rationalize what's going on, realize that if somebody's doing something to you, most likely they're doing it to everybody in their food chain, everybody in their universe. And I take it personally because it's just not the kind of human I want to interact with. Sure. But I realize it's not due to a shortcoming I have. So it's more of a nuanced response. That's why I'm asking you if there's anything, and it could be with regard to your clients, it could be with regard to managing people, it could be with regard to the economy, knowing the timing of things, but leaving people with what did I learn from my years of experience in the industry?
Sure.
You're the first person I've asked this on all the podcasts, and I'm still learning what my voice is in this industry on the podcast. I think this is going to be my now go-to question because this is the stuff I really learned.
I appreciate the question. I'll share two things that I've learned and one thing that I've identified, but I haven't solved yet. So I'll put it that way. So the first one is relatively easy and straightforward and reflects on yours, where I also started this firm. Like I said before, any client that came in, I would say, yes. Now, what's the question?
Sure.
Nowadays,
By the way, I've been there. When you have
right,
nobody
yeah,
coming in and you're starting and your reputation's early days, I don't care whatever it is, I can do it.
Yep. It's called door law, right? Anything through the door, you practice the law. So I did that for a while. And for sure, it allowed me to learn a lot of different things, right? Like what my capabilities are, what my capabilities are not. And as the firm continued to grow, it wasn't even like necessarily by proactive choice, but it was more by reactive choice. Because nowadays, there's nothing that our firm does that I haven't done before or I personally would not be capable of doing. So now if somebody asks us like to apply our service or can we do XYZ, which is an outlier, I'd rather say no because I know we're really, really good at what we do and I don't really want to do anything else.
So stick to your knitting.
So that's number one. The second piece is more of a philosophy that, I tell all of our analysts and associates and et cetera that come in is kind of two sides to the same coin. On one side, I care deeply about every single client, probably more than they realize, and maybe even more than I should, but I really want every single person who engages with us, or even frankly that I speak to, I want them to succeed. And I treat them with that type of not only respect, but give them the presence and time and mind share of whatever I can to help them succeed. And the other side of that same coin is there will be more clients. And that's what I've learned, but only over time and having been doing this for over 10 years. So although it might sound a little bit contradictory, I do care about every single client to the fullest extent possible, maybe even more than I should. And then in the back of my mind, I always know that, like, you know what, if it doesn't work out, there will always be more clients that will come to the firm. And that gives me some semblance of solace.
Hey, look, and I understand that. It's whenever I engage with people, I'm giving them a piece of myself.
Mm-hmm.
And I want to give them the best that I can give them. I want them to rave about the experience. I want them to feel that connection, that I care, because the truth is, and you're probably driven for the same reason, that's how I want to be treated. And when I'm not treated that way, it's upsetting.
Yep.
And when I am, I'm loyal. Whether it works out or not, all I can ask you for is to do the best job that you can do. All I can ask for is your attention and your commitment to our relationship.
Yep.
And I get that. And it's tough at times because everybody's commoditized at some point in their life, and obviously not more than once. And it's a horrible feeling because it's less about the money. It's more about feeling valued.
Yeah. Yeah.
Doesn't mean the money is not important, but feeling valued is even more important than the money you're paid, because it leaves you with an empty feeling if you're not.
Agreed. And that's kind of my third thing that I mentioned I've identified but haven't solved. It's time. And because of the way that I feel about all the clients, if somebody asks for my time, I will struggle, but I will give it to them, even though I try to manage my time in terms of like doing work. Every day I have 12, 14 calls, and then I have work to do after hours.
Sure.
So I find that, on one hand, I want to give everyone my time as much as possible. And on the other hand, I also recognize that going from call to call doesn't allow my brain to reset and provide the full amount of Jeff or 100% of myself to the next call, only because I haven't had that time in between to take a breath and kind of reset, so to speak. So that's something at least I've identified. I haven't solved it just yet.
Look, every time I think I've solved for something, every time I'm in a Zen place, and it might be days, and I know there's no permanency to it, because we live in a dynamic world where I'm going to be challenged, and I'm human, and I have my blind spots and I have my weak moments. But I think the skill set is to expect you're going to get knocked off your perch, but it's the inflection time of when you can get back on it and not stay in a hindered or exposed state of mind.
Yeah.
And so that's where the concentration, the skill comes in. Is like, okay, today's a bad day. I say this to my kids. The trick is knowing that you're going to go to bed and tomorrow's going to be a better day. And if tomorrow's not a better day, you're going to go to bed then. And the next day is going to be a better day. And if you approach it with that conviction, then that's going to be your reality. And the other thing that I've learned as I've aged is I just want to be happy. And so that's really my focus. And as we're getting on the podcast, as I said, I want you to have a good time doing this and it really be something that you enjoy. Because what you want to be proud of this experience and you want it to reflect clarity in who you are. So 2 questions, because I want to be mindful, 2 more questions. I want to be mindful of the time that we have. So the first one is, if you're advising somebody, let's say you retired from the industry because you're going on your second honeymoon with the missus. And so you're not in the game anymore. How would you advise others on how to go about diligencing or picking a placement agent? What should they be looking for? You're trying to raise money. What questions should I ask? What should I avoid? I'm not going to give you one off the top. Make sure they're a registered broker dealer. That's me as a lawyer speaking. But what other questions or thoughts do you have on that?
Agree with you. First of all, make sure that they do the background check and diligence on the fact that they're compliant and registered and everything else. And one thing that I tell many people I speak with when the same question comes up is an anecdote that I'll share, a personal experience. One of my first days at Morgan Stanley, they sent us up to, I think it was Purchase, where they have a big office and kind of a training session. And I'll never forget, we're all there with my cohort, and Jim Gorman walks in at the time. And he gives a big speech. And at the end of the speech, he tells everyone, he's talking about network and reaching out, and he tells everyone, take out your phone. If I asked you to call and have a 5-10 minute conversation with every single person in your phone book, how long would it take you? Let's say 2 weeks, 4 weeks, people are away, sick, whatever. 4 to 6 weeks, you should be able to have a conversation with every person in your phone book that will pick up your call. And after that, that's basically your network has run out, maybe another month if they're making introductions. But after, let's say 30 to 60 days, that is your network. And now you have to figure something else out. And the same thing applies in fundraising, especially when you're talking to a placement agent, right? Engaging with a placement agent or an advisor or broker or whoever, especially one that is telling you that, I have a Rolodex, I know investors, I'm going to bring investors to you. It's important for you, for the person, about to hire that person, to understand the fact that their network only goes so far, 30 or 60 days, let's say at most. After that period of time, it's more likely than not that they also have access to a pitch book or a Dakota or Preqin or whatever, and they're starting to reach out on a cold basis. So it's important in kind of diligence, and maybe this is more recognition, that you as a potential client of a placement agent recognize that. And if you are intent on hiring that placement agent, do the diligence on their network, and also recognize that after 2 months, maybe even 3, let's say at most, there's no one in their network that they're reaching out to anymore. Now they're reaching out to the broad public. Broad
people they know.
network.
So then how do you apply that though? Meaning, is it, right? I'm asking, okay, tell me about your network. How do I pose that question that gives me a response?
You ask them about their network, and you also try to ask for references. I'm often asked for references. I'll often answer the same way where, let's get to a point that you want to engage us, and then I'll provide you with references just prior to engagement.
Sure.
But I'm often asked for references, and I'm happy to provide them, but I'm also not positioning myself as I have 42 family offices that know me personally, and then I'm going to go out, right? Our whole approach, which is why we ended up building and taking the approach that we have, is that we have this database. It's been enriched. We've been doing this for a decade plus of reaching out, and we have the data. And that is how we're reaching out to people on our clients' behalf. Because of their own relationships, there's a limit to those relationships. So my advice or suggestion would be to limit your engagement with those third-party service providers to their specific network. And then either do your own outreach parallel or after they do, or hire us, or just recognize the fact that their process or their service will first go to their network, and then will go out to this broader audience that doesn't actually know them personally.
And now, finally, before we wrap up, how's AI, if at all, affecting your business?
Well, look, I'll put it this way. We built AI maybe 2 years ago into our platform so that we can increase outreach, right? So from 100 investor contacts on a weekly basis to 300 contacts.
Okay.
Thinking that like, hey, if we increase volume, we'll increase meetings and chances of raising capital.
Yeah, the more hooks you put out in the ocean, the more fish you catch.
Well, that's what we thought. What ended up being the case was that as we became more efficient, we became less effective. And the reason for that was when analysts were calling these investors or emailing them, the personalization was relatively so broad that when the analyst actually said, the personalization to the investor, anything after that, they would fall flat on their face because they didn't know who they were calling. And now analysts, before they even call an investor, they do the whole qualification personalization process that I mentioned earlier. So they know exactly who they're calling and there's conviction around why they're calling them. From a human analyst, I know why I'm calling you.
Which makes sense because one of the things we're suggesting with AI is it's the soft skills that are going to actually differentiate our careers, the ability to connect and resonate with others.
Yes. So AI now, how we use it is just to be a little bit more kind of efficient in our processes internally, but it's still a very manual process that we do. So for example, the investor database, we're building an AI into it now where it can call and create the filters based on feedback. So my associate doesn't have to do that for each client every week, right? And it will reorganize our CRM based on a client for most likely to engage investors based on the data that we have.
Well, you know what? You actually just changed my perception on AI with regard to, for some industries, it might be quantity versus quality.
Yep.
But for certain industries where it's more about intimacy, it's going to be quality over quantity.
Absolutely. Quality
That's
over
how I'm looking
quantity
at that.
is how you do fundraising. Every single time, that is the way that I will lean. It's quality over quantity for sure.
Well, Jeff, I really appreciate your time today. Great having you on as a guest. I look forward to seeing you in person. Thank you so much. And until next time.
Absolutely, Ron. Thank you also for having me.
My pleasure. Okay. So I have to let that run for a moment or two, but otherwise, yeah, I actually think I found my first uniform question I'm going to ask people is, what did you learn from this experience?
I like that a lot, actually. That question was...
Yeah, because I think about that all the time. And when I speak to people one-on-one, I'm often going into my learning curve.
Sure.
Which is in part, I think, why I get all the phone calls that I get. Even if I'm not in the industry, I had a client call me once. There was a tax wrinkle in the fund world under Section 409A of the Internal Revenue Code where you're able to defer your carried interest. And then I remember my client calls me up with his accountant wanted to put a footnote in their audit, and it'll come back to me what it was. And I was like, dude, I'm a securities lawyer. I'm not a tax lawyer. I was like, yeah, but you make everything go away. So I'm like, all right. I figured out the process. I called each of the accountants. I'm like, walk me through what the issue was. Mm-hmm. And it's about when you trade securities in other countries, a potential tax liability in those countries where they might come back to you and say that you owe taxes. And so some of the auditors back in the day were making managers get really expensive insurance to cover it when one could argue it wasn't needed. And I wasn't doing it to be obstinate or challenging. I was really doing it to understand.
Sure.
But it goes back to process. I'm a fairly relentless person. Good.
Ron, that is, it's a quality that I'm learning still more and more each day that just, it doesn't exist in most people. It really doesn't. And there's no way to like teach someone or tell someone to be more curious and to do those types of things. There's just no way. They just stop caring, or they're like, okay, whatever. And they don't need to know the rest of it, or so they think.
No, well, look, all that's my problem. I really appreciate your time today. It'd be great if you want to meet up for like breakfast, coffee, or lunch.
For sure.